Feeling good about that rent check? Well, hold on. If you own rental property in California, that deposit alone, it doesn't tell the whole story about your profitability. To know if you're really making money and avoid those unpleasant surprises, well, we need to talk about the true cost of owning rental property. It's easy just to think about the main mortgage payment, the PITI, the principal, interest, taxes, and insurance. But trust me, experienced landlords, they know that's just the beginning. There's a whole bunch of other operating expenses that you absolutely have to account for. So let's run through some of the big ones. First up, property taxes. While part of PITI, when you first buy an investment property, the county reassesses it based on your purchase price. And thanks to Proposition 13, that value doesn't jump dramatically each year. It's usually just small inflation adjustments, and that's good. However, that initial tax bill is based on what you paid, and it can be quite a bit higher than the previous owners. And then there's that supplemental tax bill, that dreaded supplemental tax bill, that lovely surprise the county sends out months after you buy. It catches you up on the difference. And honestly, that first supplemental bill trips up a lot of new investors. So definitely budget for it in year one. And second, insurance. How can we not talk about insurance? This has become a huge headache in California lately, hasn't it? I mean, getting good landlord insurance, that dwelling policy that covers liability and property damage, it's essential. You just can't really operate without it. But with things like increased wildfire risk and higher construction costs, premiums have been climbing like crazy. You really need to budget for potentially big jumps each year now, not just the tiny increases. And you definitely need to start shopping around for quotes months before your policy renews. And third, maintenance. Maintenance and repairs. This is where things can get really unpredictable. You've got your routine stuff, maybe some landscaping, but it's the unexpected repairs that can hit hard. An air conditioner dying in July, a pipe bursting, an appliance giving out. Fixing these things costs way more today than it did just years back. Parts and labor is going way up. Forget those old formulas like the 50% rule for estimating expenses. They often don't work well here. What does work? Well, building a dedicated repair reserve fund works really well. Seriously, folks, this is key. Treat it like another bill. Automatically stash away a percentage of the rent each month, maybe 5%, maybe 10%, maybe even more if your property is a bit older. Put it in a separate savings account just for maintenance. And when that repair bill does come, the money's actually there and it's not a crisis. And remember, being proactive with maintenance, like getting your HVAC tuned up annually, it usually saves you money compared to waiting for that major breakdown. And fourth, vacancy loss. Even the best screening, tenants eventually move on. No property stays rented 100% of the time forever. It's just realistic to budget for some vacancy. Maybe assume you'll lose somewhere between 3 to 8% of your potential annual rent during those turnover times between tenants. And obviously that depends on the market. But building that into your numbers gives you a much truer picture. Fifth, all the other stuff. Don't forget things like HOA dues if you're in an association. Those rarely go down. And maybe you pay for water, sewer, garbage, landscape costs, pest control, maybe even paying an accountant for your taxes. It all adds up. So why obsess over tracking all of these costs? Well, because knowing your true operating expenses is the only way you'll know your property's true annual operating income. It's profit before mortgage. And that's critical for figuring out your real estate or your return on investment, which we'll talk about more soon. Plus, budgeting accurately just saves you so much stress when those inevitable expenses pop up. It's all part of managing your property like the valuable asset that it is. We actually break all of this down. The expense categories, the budgeting ideas, the tracking methods. It's all in Chapter 2 of our free essential guide to rental property success. It's designed to help you get a solid grip on the full financial picture. So don't get caught up by these surprise costs. Understand the real numbers. Budget proactively. You can grab that free essential guide using the link right down there in the description. I'm Jeremy Higgins with True Haven, and thank you for watching.